Renewed worries about global economic growth sent U.S. stocks plunging to triple-digit losses Thursday, a day after 2014's biggest rally on Wednesday suddenly looked like an elaborate head fake. The Dow Jones Industrial Average was off 308 points to 16,686, and 1.8% loss that was mirrored in both the S&P 500, off 1.9%, and the Nasdaq composite, down 1.8%. The small stock Russell 2000 sank more than 2%. The losses were a sharp reversal from Wednesday, when the Dow clocked a near 275-point gain. Flowing release of the Federal Reserve's meeting minutes signaled the central bank intentions to keep interest rates low. The Dow is now on track for its first three-day move of at least 200 points since August 2011, when U.S. debt was downgraded. European markets erased early gains and were poised for a third straight day of losses. Markets in Asia were less settled. Tokyo's Nikkei 225 index fell 0.8% Thursday after a 1.2% on Wednesday. But Hong Kong's Seng index added 1.2%. Inventories, up 0.7% in August. Renewed volatility and jitters appears to have gripped a market looking for direction. The market swings daily now, with bad news about the global economy being bad news and bearish one day and being good news and bullish the next, says Edward Yardney, chief investment strategist at Yardney Research. On the bad days, investors are pessimistic that the Fed and other central banks have any tools left to boost growth. On good days, they hope that they were wrong the day before. If you are confused by all this, you should be, Yardney says. Investors in Europe were looking ahead to a speech in Washington by Mario Draghi, president of the European Central Bank. Economic forecasters have cut Germany's growth rate to 1.3% from 1.9% due to weak Eurozone and global growth, as well as uncertainty over the Ukraine crisis. The International Monetary Fund cut its outlook for this year and next for global growth, citing weakness in Japan, Latin America and Europe. The IMF expects the global economy will grow 3.3% this year, below what it forecast in July. Among the few bright spots, Apple, up 0.5% to $101.35 after billionaire activist investor Carl Icahn again prodded CEO Tim Cook to shake some cash loose and buy back company shares. Icahn says Apple stock is undervalued and says shares are worth $203.